Thanks a lot for having me.
Super excited to dive in. Walk us through why Bloomberg has been just so successful over the last 40 years.
So many people have an opinion on this. Everyone has a right to an opinion. The best opinions probably come from users, and users who have had a little bit more holistic view of Wall Street, whether they've managed a fund or they've been an investor in different software companies. If you take all of that and you put it together, the simplest answer is they have a really good product. That's kind of what people forget. The second really important answer, I don't know how much I should say about this, but having done a lot of industries, invested a lot of industries, startup in a bunch of industries, the fintech software industry is not as competitive as other industries.
What do you mean by the fintech software industry?
Financial information software. This is software that banks and hedge funds use.
The data that it's based on.
That sort of dovetails in a little bit. The reason I mentioned this is if you look at sort of the first part of the answer, which is, why is it a good product? There are four major terminals. We're trying to become the fifth, and we're trying to be the best of the fifth. We think we're going to do that. But of the four major terminals, only one of them has any sort of messaging system at all. Any kind of messaging. Mail, direct message, instant message, voice. The only one is Bloomberg. And that's...
Why is that? Because that's so obvious.
Yes.
You could code that up in a day.
It's a mix of different reasons. One of the major issues in software development in general, coming as an outsider, is the role of product and how companies canvas for what they do next. Product people, unless they've been in the seat, you really need people that have been in the seat. And then hedge funds and target customers of this space, they don't want to talk to you. They want to talk about stocks. They want to focus on other things. You have to be more Jobsian than YCian in the sense that you have to sort of decide what they want. If you have been in the job, I spend most of the day on Wall Street. I know people who they spent their entire day just talking to people. There was a great lady on Wall Street, I won't say who was a very successful hedge fund manager. She virtually just spent the whole day calling up people, including people like me, hardworking analysts and portfolio managers, and just, what do you like? She just basically was a fund to funds manager in this app. She cherry picked everyone's ideas. The people she talked to were good. She would invest more in that idea, and she would trade ideas. If you know Wall Street, it's an extremely social place. And venture capital and PE is the same. Everyone's chatting, everyone's networking. If you make a system that you want people to use for this industry, you have to include that social piece of it. Why didn't FactSet do it? Why didn't these other guys do it? I spend less time worrying about those questions, and I spend more time, let's implement it. The first feature we made in Godel was that, and lo and behold, it was like the most popular thing. Everyone said, I love being able to interact with other investors. That gating mechanism of price is a good thing. Bloomberg's fairly exclusive in terms of its price point. The funny thing about Wall Street is $25,000 is not exclusive, but it is a gate. Almost any amount of money is a relatively good gate. Anything not a tiny amount, so anything in the thousands of dollars, I think automatically, who's going to use that? Only enterprises or very wealthy people. So I think the features are really great, and a lot of competitors stopped at sort of a base case of features. Bloomberg just went a little further. I think that they haven't gone a lot further. The reason Bloomberg is ahead is they went a little further than those other three, but somebody could easily go a lot further. The trick, though, is it's a very big engineering task. Lots of data, lots of data maintenance, and then procuring new forms of data that the street cares about and showing it to them. You still have to have, I think, and this is sort of the big debate in our office, do you need the base layer substrate of every bond, every stock, every CDS, every mortgage, everything, every country, before you can then go to that next, okay, let's further what those other guys have done. My bet is yes. I get healthy debate from my coworkers that we should just make the killer feature. I'll give you a really good example of a startup that did that called Visible Alpha. Visible Alpha did one thing. This is why the financial information software industry is such a great space. Visible Alpha were a bunch of hedge fund people, and they said, what stinks about investing is that I want to know what Wall Street consensus is for Tesla car deliveries. There's no way to get that. If you go on Bloomberg, if you go on FactSet, the best you can get is consensus for revenue, consensus for earnings, things like that. They made the product and they sold it to S&P Global for $500 million. I don't know if 20 million went into the company. That kind of ideation, quick turnaround, Wall Street uptake. The sales cycle on Wall Street is fantastic. They love buying
And nowadays
software.
you've got prediction markets. You can maybe grab some of that data. To me, one analogy, and you can tell me where I'm wrong here. One analogy to Bloomberg is Netflix.
Oh, and you're always right.
Netflix. So, Netflix, I love Netflix. I pay $20 a month for it. They have obviously lots of people that pay $20 a month for Netflix. They can aggregate content across all of those people. They have the weirdest stuff on there that I would never use. They have all these odd documentaries, the craziest things, right? They have to cater to everyone's taste, a little bit of everyone's taste that's out there. I assume Bloomberg is similar. Most of the data sets they have, probably by most, 98% of the data sets, an individual Bloomberg user would never use any of those, right? but that one data set they really need. Bloomberg needs to have to keep that person happy.
So far, it's been just having a few more data sets than the rivals. They're sort of a lazy company. They don't do tons of innovation, but they do stay a step ahead of the rest. It takes years for Bloomberg to launch a new product. It's kind of sad.
Oh, yeah.
It's very slow. I do think that data thesis you have is a good one. What's interesting, I think their margins are much higher than people think. While they spend a lot of money on data, they, I think, are resting more comfortably than, it might seem.
Netflix has more competition in some ways, and they got to stay more ahead.
I think so. And the margins are a little bit lower, or maybe even quite a bit lower. You have one of the things there that's really interesting. Netflix probably has this to some extent too. Bloomberg is very tough on licensing. This is kind of like our opportunity. People kind of hate the company, but love it at the same time. Have this 2-year agreement that's very vigorous. They don't tell you, hey, you're 2 years up for renewal. If you have 10 licenses, you pay them $250 a year, and your hedge fund shrinks a little bit. You want 8 licenses now. I mean, you're shit out of luck. It's not AWS. Yeah. And that just locks them into some very, very weird dynamics. We're trying to change that a little bit, where one of our machines, we have this really crazy AI. It's a vector search in essence for tick data. Nobody's ever made anything like it. It has to run on 8x H100s. This is a very, very, very expensive product. In fact, Bloomberg really couldn't afford to do it without a new line item. They don't want a new line item because if you're paying $25K, you say, well, wait, there's more stuff. I'm not getting this, right? Yeah. We told one hedge fund, if we wanted this for your entire firm, it would cost $7 million over maybe 200 to 300 people. They can't innovate in some ways because of that. They have a price point. And when you lock yourself into one price point, Netflix has this too, where they're hoping you watch as much content as possible. On Bloomberg, some people don't use it. Some people are locked into their system. Goldman might have 10,500 licenses that they're not using. It's just, you have these numbers games that sort of help. If all of them were using the maximum compute and the maximum data possible, I think Bloomberg would have to raise its price. I like the idea of more of some base level fee, but then also like add-ins that more
add-ins
honestly replicate.
Or if you want to do analysis on it, then there's compute. You could just charge for costs of the compute.
That's what's interesting. Quants don't use Bloomberg. Venture doesn't use Bloomberg. So Bloomberg missed the 2 biggest trends in Wall Street history. In the 90s, the quants started to emerge. They needed data. They needed software. They needed all this stuff. It wasn't available. They built it themselves. They would have loved to use Bloomberg instead. Unfortunately, they dropped the ball. Ran for mayor. Tell you where his priorities were. They just missed that wave. Then the second biggest wave was the rise of privates. I worked for a Tiger Cub hedge fund. And I had this disagreement with my boss that we should do privates, and that companies like Facebook and so forth were probably worth investing in, even though they were private. And he complained about the liquidity and the issues like that, which made sense. But the rest of the street started embracing privates, and it became this huge, huge field. And VCs, the biggest VCs back in the day were $1 billion. Now they'll do $1 billion check. It's a really crazy industry, and PitchBook sort of came in to fix that, as did some other guys, Crunchbase, Preqin, others, to embrace the sort of private companies. There's still not great solutions there. We're working kind of hard on that. So I think they're this comfortable lumbering company, but you do have to be really creative. I think that's where like Visible Alpha did a killer job. You still can't get that data, I think, on Bloomberg. S&P did a great job of buying them. And there's other things like that. So we're working on both building that base layer substrate where somebody could use it for their day-to-day and replace their Bloomberg, but also the new killer features where they say, okay, this is not available anywhere else. I need this.
Now, by the way, we're investors in DL Software, very happy investors, just putting it out there for the audience. There's multiple reasons why we wanted to invest DL Software. One is you have a great product. People like the product. The market's obviously just massive, right? If you could just take on Bloomberg, that's obvious, massive market. Like one of the other things, and I would like to get your opinion about people like you. You've got a big megaphone. You're well known, you're on X, you're out there. The potential of the CAC for you to acquire a customer is much lower. We've invested in a few other folks like that they're doing like random software companies, but they've got a big megaphone, and you can just see their CACs are just lower than others because they're out there more. I don't know. I'd love to get your thoughts about like those types of entrepreneurs.
They're certainly well aware of it, and guys like software engineers come work here, and they're brilliant guys. They're great at software engineering more than they are at business. They say, oh, Martin, you can snap your fingers and get 1 million customers. I say, that's not how it works. I like being well known.
Yeah, of course.
It helps a little bit. Where it really, really helps is this stage of the company where it's depressed.
Early stage, recruiting
for sure. Palmer, Lucky, and I have had some great conversations on that, where you get the true believers.
Yeah.
That's really helpful. And they really want to work hard because they like you. They're coming to the company because they like what you talk about and they like how you do things. And you're really seeing eye to eye. What's really depressing about a software startup is you work really hard, you build software, and you have $63,000 in revenue, and you're just banging your head against the wall. How are we going to break out? And what's amazing about DL is we've been, I wouldn't say profitable, but very close to break even since we started this product. What's amazing about that is I can kind of titrate my noise level on the product based on that. Whereas if you wanted to compete with Bloomberg, what I would do if I wasn't who I am, for better or worse, mostly better, I would put my head down. I'd raise like 25 million, put my head down for 2 years and not release a peep until 2 years passed. That's not really a viable approach for a lot of entrepreneurs. You're supposed to iterate, I think, in software. And if you pop open the product 2 years from now and nobody likes it, then
Correct.
you lost opportunity to sort of course correct.
There are so many graves littered with people who took that second approach because they didn't get the customer feedback. They spent 6 months developing such an important thing that no one really cared about. And so having some sort of market reaction is helpful.
It's kind of like the old school entrepreneurs where you don't start the company unless you know who your first 10 customers are going to be. And that's not at all how things are done today. Like you go boldly into the unknown. And thankfully, most of the startups in this space are people who did it. There's a company called Rogo. It was a guy who worked at one of our customers. And I think they've done relatively well. When you have that experience, it helps a lot that you can get your first couple of customers. In my case, it could be phone calls I make to enterprises, or it could be social media. That's kind of the other thing is like we started off as a almost like a prosumer product. And now because we've gotten that initial revenue from our very loyal prosumers, we can now approach enterprise and do price increases and start to think about, a different TAM and a different market segment.
I assume, by the way, the first customer was you. Like you were like, oh, I need this product. I need to use it. A lot of times people build it and they don't even use it.
Talking to like companies like S&P Global or others, I've even started talking about acquisitions. They said, why are you guys special? I said, it's just one reason. We have great software engineers and everything. We have great product people. We have all this stuff. It's really well done. But there's one thing that sets us apart, truly, which is that we actually do invest ourselves a little bit. And I almost want every engineer to come here and have a little portfolio, whether it's on Robinhood or whatever. I'm at the point where I'm always like, if you come in here and you don't, I'll give you the money. I want you to trade because one of our front end guy we have this tremendous front end engineer who's never invested in his life. And he's addicted to investing now. And he's like become from 10x to 100x because he now knows like what he's coding. And
you've got to be like, you should be thinking as an investor. You should be thinking, okay, I bought this random company because I think it's undervalued. Great. Okay, here's my assumptions on it. Then maybe things change. It goes up and it changes a way where it's no longer undervalued. Now you think it's overvalued. You have to have some sort of interval of relooking at that. Get everyone in the organization all the way through thinking like an investor because that's who your customers are.
Exactly. I mean,
the beauty of that is it's fun. Imagine
it's
if
easy
you
and
were
fun. Everybody likes
compliance, legal tech or something. First of all, it'd be hard to put them in their shoes. They can't just do it.
And actively practice law. Yeah. The delta there is at Bloomberg, you're specifically banned from trading. And look, maybe the news organization has a hit piece coming out on your favorite stock. At the end of the day, like that's a huge trade-off that's not worth it. I'd much rather have a house of investors that love the markets and they are the antenna. I'll take a stupid example that we don't like, the whole politicians trading thing. Some people try to make products around this. I think it's nonsense. That was a thing for a while where you wanted to front run Congress's trades. That kind of antenna where people are really talking to the street. That's more of a retail thing. But people are talking to the street asking, what actually do people care about? That's the kind of insight we get that nobody's going to share that with S&P Global. No offense to what a great company and a future acquirers, but nobody's going to really share that.
So are you going to acquire them or?
They're such an interesting company, Oren.
I'm a huge fan of like older school data companies. All of them been around for over 40, 50 years. They're all really interesting things.
Moody's is very similar. And I won't say which company. One of them told us, Martin, we are a 100-year-old company. We stopped growing about 50 years ago organically, and we need to buy companies like yours to exist.
Yeah. By the way, these are very good acquirers because they've got a great channel.
Distribution, yeah.
You can just stuff the channel with new, interesting products. So they're good acquirers. They're disciplined. If you look at these companies historically, they've been fairly disciplined about how they acquire the companies. They can pay 2x more than a private equity firm because they can stuff the channel and all of a sudden that company is going to grow so much faster.
And they can afford to make a mistake, even though they're generally very disciplined at 150 billion market cap or whatever. If they take a flyer on $1 billion deal on a kind of speculative AI company, they kind of want to be in the space. That's a couple of months of cash flow. They'll live.
Absolutely.
They're not going anywhere. All these guys, ICE, NASDAQ, these are all great partners. The best thing for us is normally you have to make a lot of noise to get noticed by these guys, but we show up on their customer bill. We basically resell their data. So for us, every day we talk to these guys. So the relationship.
And by the way, for our listeners who might not be familiar, ICE is not the immigration service. ICE owns the NYSE. They own a bunch of data companies. Before you did this, you were in the drug discovery world.
Other than that, I think Godel, we're getting close to a public launch where we're going to sort of start advertising and marketing. We haven't done any marketing and we have a good revenue run rate.
That's amazing.
And we're very lucky, but we're now going to start turning to demand generation. It's something that I'm very nervous about because selling drugs is very easy. You almost have to do almost no demand generation. And the doctors know your job as doctor is to know what drugs are available. You kind of give a little bit of a hint. Software is wildly the opposite. There's a perfect solution for your problem. You just don't know what it is.
So you can continually make it better. Even if something was good for you in the past, it might not be anymore. Just if you just think about how I'm sure we're all moving between all the models all the time. Just because you were using OpenAI 2 months ago, maybe you're using Anthropic today, and maybe you'll go back to OpenAI a month later. Because things change, right? So software changes, whereas like the drug is kind of like set.
Yes, absolutely. You can't change it after. I do think what's funny about that, just thinking out loud, is the moats cut both ways. There's companies out there making better products than the incumbents. I'm sure some people feel this way about OpenAI. OpenAI is so dominant. A lot of people on the Twitterati and things like that, in the Valley especially, think, oh man, Anthropic's so great. If you look at the actual dollar share and the actual mind share, I did this with traffic, so you just use SimilarWeb. OpenAI is about 67% of all the traffic related to AI writ large. Everything. I included chatbot, character AI.
Is such a great brand. Brand's important.
So the first mover, great brand. So what do? You can make the best product, but you have to fight on every front. You have to fight on the sales front, marketing front, and so forth. I'm not used to that. It's kind of a different vibe, but I'm having fun doing it. One of the things I want to do, this is like very tricky, is I was talking to Joe Lunzel about this a little bit. Godel is the only place where you can find the day-to-day stock price of OpenAI and SpaceX, and we're the only guys who get it from NASDAQ private market. And NASDAQ, they are the largest kind of hand-to-hand broker of these private transactions, but there's no order book. We want to make an order book for the first time ever where you can trade SpaceX or any other private within reason, Anduril, in an actual order book where you make your market order, your limit order, you cancel your order, et cetera. There's obviously a lot of open questions about how in the world could you do that?
How do you do that? And how do you do that without the company's permission for every time you do it? And
you're not on the cap table, obviously, in this. I've come up with a really creative solution for stress testing this, but the biggest issue in our case is regulation. Well, Lonsdale said something really funny, the chair of the SEC on a podcast, and he said, well, I can buy Orin Coin 69 tonight and lose $1 million, and there's no regulation, no crime is committed. But if I dare try to buy $100,000 of Anduril, there's got to be 100 million regulations. So clearly something's wrong with that. And whether you do it offshore, where there's the SEC, can't reach you, or you try to do it onshore and work with regulators who don't want to work with you. And ultimately, these assets are so big. In the old days, we didn't care because the stock market's so big, who gives a crap? But now it's like, no, some of the biggest companies are private.
Not only the biggest, but the ones that have the most mind share.
Most interesting companies.
Stripe, Databricks, Anthropic, OpenAI. You go down the SpaceX, you just go down the list. Like these are the companies we're talking about even more sometimes than Microsoft, NVIDIA, even more than some of the Mag 7.
In 2005, the hedge fund I worked for, our biggest investment at the time was like Motorola. Facebook was taking off and like, we can't buy it because we're not Peter Thiel. It's and the anointed few who got into that round, no shade to any of the, great friends who were early there, but, you had to go through, the SV sort of hoops. And even if you're Fidelity, you're still only getting invited to like Series D or something. And, I think that
nowadays really Series G, HI type of thing.
Right. So the private markets, they just use sort of the public markets in a way for exit liquidity. I think that's wise, but I also look at Figma. A lot of the privates end up being overvalued private, and when the public reality sort of hits you, these marks were really, really insane marks. That part of Wall Street is so important. If you type in Anthropic or Anduril into Bloomberg, it says not found. We have a full toolkit for that. And one step further would be actually letting people trade. We've heard from some of the bigger places, the Citadels, the Jane Streets, the bigger hedge funds, that they would love to do this. It's something that we hope to roll out at some point, but it's a very challenging sort of regulatory thing. The nice thing about it is The SEC cares a lot less about Citadel and Jane Street trading with each other than they do about the average Joe sort of losing $500 on something.
Speaking of Citadel,